It's Monday, December 27, 2021. I want to start this video out by saying this. This is not going to be a video about me being optimistic, telling you what you want to hear, positivity, teddy bears, rainbows, and puffy white clouds. 2022 is around the corner, ladies and gentlemen, and what is coming is this economy built by addiction, a stock market built by addiction, and we can be as positive thinking as we want to be, as optimistic as we want to be. We can hope that everything's going to be fine and everything's going to be okay. But the reality of it is 2022 is going to be a very, very rough year. And due to the fact that we have a addicted economy, we have an addicted stock market, we're going to see a lot of pain and suffering financially, and nobody is going to be immune from this. And when you begin to worry, when you have concern for what is happening, this makes you take action. This makes you proactive. Don't wait for things to happen, ladies and gentlemen, because they've been happening for years. 2021 is a stark reminder of what is coming. And we saw so many warning signs and red flags in this past year. We watched the US economy be absolutely decimated. We watched the middle class be decimated. We watched small, medium business decimated. We watched people's jobs decimated. What more do you need for you to understand what is about to happen? I want to share a couple articles with you today. First one here on CNBC, and if you were following the markets today, you already know this. S&P 500 closes at a record. Dow Jones up 350 points. And so I guess this was the Santa rally everybody was waiting for. But my question to all of you is, why in the world would the markets be going up? What was the great news? For the past week, I heard nothing but the health crisis. We all know that we have a labor force with 107 million people not in it, millions quitting their jobs. And we're going to talk a little bit about now more debt coming to the consumer. We're approaching $30 trillion of debt as a nation, and markets are up. What's the good news? We're told that the Fed's going to begin tapering at the beginning of 2022. Apparently, these markets are ignoring it, maybe don't believe it. But it just, at this point, we know that the tapering has not begun. That is for sure. We know that the Fed is still buying. Rates are at all-time lows, 0%. And people are continuing to believe in the Fed coming to the rescue. They're drinking the Kool-Aid. And it's going to be a very, very interesting 2022, needless to say. Holiday shopping fuels the return of credit card debt. This on CNBC today. After paying off $83 billion in credit card debt in 2020, Americans are on track to end this year in the red. They've resorted to getting back to the credit cards. You can expect people to turn to their credit cards in 2022 as millions are not working, as inflation is going to continue to soar, and millions of people are going to be dependent on these credit cards just to pay essentials, just to go to the gas station, just to go to the grocery store. People using credit cards to pay rent, to make a mortgage payment. I don't think we really understand that millions of people are hanging on by a thread. Millions of people are literally a flat tire away from being in very, very big trouble. And millions are in trouble right now and don't even realize it. The Americans that paid off a record $83 billion of credit card debt got a lot of help from those benefit checks, those stimmies, those child tax credits. And that's all come to an end, ladies and gentlemen. And now those credit card balances are going to be soaring, and they're going to be heading much higher in 2022 as people are going to be dependent on these cards just to pay the essentials, just to get by. And how long can people do this before they begin to max out the cards? How long can they just pay the minimum? And how long before we start to see enormous trouble from all this? Credit card balances rose $17 billion in the third quarter of 2021. In the fourth quarter, consumers charged billions more. By the end of the year, Americans are now on track to end up with $70 billion in credit card debt. The average household card balance is now $8,006, and that is climbing. This is extremely scary when you think about it, ladies and gentlemen. People literally are one event away from being on very, very hard times. Your kid falls down, needs 20 stitches on his knee, boom, credit card, $1,000. The flat tire, transmission goes out, alternator goes out. Just one event away, ladies and gentlemen. And this is why I've been so passionate about telling people to make sure that they save some money, that they have a cash reserve put away, that they have some hard assets put away. If an emergency came, could you sell an ounce of gold or a couple ounces of silver for some cash to take care of that emergency? You know, if you have a credit card, you're more likely to spend about 25% more using plastic than you were if you used cash. And it's just so easy now for people just to, if they want something now, instant gratification, credit card. And people have so many credit cards, and they're going to get behind even farther. Balances are expected to continue to rise in 22. Ending first quarter, U.S. expected to be as much as 10% higher than a year ago. Balances, credit card balances ending in the first quarter of 2022 expected to be 10% higher than in 2021. Usually card balances decline in the first few months of the new year because people pay that down. People get their tax money back. They pay the credit card down. Many people are not going to get a tax refund this year because they took the cash for the child tax credit and unaware that they're not going to get a tax refund because of it. And so now how do they pay the credit card debt down? So again, it's expected to be 10% higher in the first quarter of 2022 than the first quarter of 2021. Not a good sign. So if this economy was recovering, people were back to work, making good wages, again, if this economy was booming, as we're told on a daily basis when I watch these business channels, why in the world are so many people dependent on credit? Why in the world can people not pay their college tuition back? Why in the world do we have people now, 500,000 people plus in loan modification on their homes because they can't make their mortgage payments? People say, oh, we have a inventory shortage in housing. Well, we wouldn't if people were actually making their mortgage payments right now and not in loan modifications with their bank. See, how about all these homes that were in forbearance? It's just shocking, isn't it, that all of a sudden you don't have to pay your bills. You don't have to pay the college tuition. You don't have to pay the mortgage debt. Auto dealers, banks doing the same thing on auto loans, giving people 6 months to not have to pay an auto payment. So all of this forbearance and these moratoriums that are happening behind the scenes, we're not getting a real true number on the data, what the real delinquency rates are, what would be the real foreclosure rate right now. Those 500,000 people couldn't get loan modifications. This whole thing is a mess, and we don't know the real numbers. The only numbers we get are the very watered down numbers, the very manipulated numbers that we watch on the television every day. And people are making life-altering decisions and investments on this data that is completely corrupted and manipulated, and they're going to pay a very, very serious price here, ladies and gentlemen. Getting back to credit card debt, this debt is going to be much harder to pay down as people are paying more for everything. As the free money has run out, interest on these cards continues to go up. Average annual percentage rate on a credit card now is above 16%. People are getting in over their heads. They're going to continue to get in over their heads as rent increases, as food prices, gasoline prices, energy prices, medical insurance, auto insurance, everything across the board is going to continue to go up. If you believe that this is all going to be fixed in 2022, you are delusional. You really are. Inflation is going to surge. The price of everything is going to continue to go up. And we're going to see stagflation at a rate we've never, ever seen here. Again, people are getting in over their heads. They're addicted to debt, and the debt is going to be harder and more expensive to pay off the longer this economy decays. Think about that. There's people out there telling you right now to go into debt, which is the most insane thing I think you would want to do right now is get yourself into debt. I don't understand it. The more debt you have heading into this recession, depression, I would say that we are right now on the cusp of entering a depression. It's not going to be forgiven, ladies and gentlemen. Just all I have to do is go back to 2008. People lost their houses. They were evicted out of their houses. Their credit was destroyed. Their cars were repoed. A lot of bankruptcies. It was a mess, and you do not want to go through it. The hedge today, there's a way above average speculation. Retiring boss of massive U.S. fund warns retail investors to step away from risk. When markets unwind, ladies and gentlemen, risk will unwind the most. $1.6 trillion fund group, T. Rowe Price, CEO Bill Stremberg, cautioned in an interview with Financial Times, over the past 2 years, there has been a way above average amount of speculation. Everything today is speculation. It's all speculation. It's everybody getting on Reddit. It's everybody telling their friends to buy this crypto, that crypto. Let's buy movie theater stock. Let's buy GameStop. It's really a crazy, crazy time. And I don't think that this is going to last much longer. I mean, how much of the stock market consists of zombie companies that solely are surviving because of corporate buybacks and 0% interest rates and the Fed? Bill Stromberg goes on to say major indices are being propped up by a small handful of extremely large, overvalued companies. He says it's time to manage away from the most speculative investments with very high valuations without revenues to support it. So again, we have another multi-millionaire, multi-billionaire warning people that maybe it's time to use caution. Maybe it's time to get out of the speculation and take some risk off the table. I want to close with one last article from The Hedge, and it was titled Sleepwalking into the Abyss. And it's a good article. If you get a minute, check it out. But I'll sum it up like this. After reading the article and some of the other articles today, 2022, ladies and gentlemen, is going to be among us very, very soon. And I'm supposed to tell all of you that it's going to be a great year. It's going to be a positive year. Let's all be optimistic. I'm not going to do that today. I'm not going to close this video off and tell you that. And look, I am an optimistic person. I'm not a negative person, but I'm a realist. And the reality of it is, if you believe that 2022 is going to be a phenomenal year, it's going to be puffy white clouds, rainbows, and teddy bears, and everything's going to get fixed, and everybody's going to go back to work, and the entire system is going to go back to normal, you are sadly mistaken. I'm going to tell you right now, ladies and gentlemen, it is time to worry. It's time to be very concerned, especially if you have kids. And if you begin to worry, if you have any concern about what is going to happen in 2022, this means you're going to wake up. This means you will take action. This means you are going to become proactive, and you need to do this yesterday. Otherwise, you can be positive, you can be optimistic, and you can believe that these inflating bubbles will last forever. You can believe that devaluing the dollar is a good thing. You can believe that distributing free money is a good thing. You can believe that Wall Street hitting record highs with no fundamentals behind it is going to last forever, and that's a good thing. You can believe that this expanding debt, 0% interest rates, you can believe that's all a good thing. You can believe that the banking institutions are safe and sound. You can believe that your money is safe in the bank. You can believe all this. If you want to be positive, that's your right. You can do that. We all have free will. We all have a brain. We all have choices. But I'm going to sit here and tell you today as I end this video, it is time to get very, very concerned, very, very worried. And right now, look, I don't watch sports. I don't have time. I'm watching what is happening in this economy on a daily basis. I'm watching people around me. I'm observing. I'm watching my environment. And I see a majority of people completely unprepared for what is about to happen. And it doesn't matter what neighborhood you live in, what kind of car you drive, what your zip code is. It is going to affect everybody. And so few people are prepared to deal with what is to come. So as I leave you, don't get complacent. Stay on course. Stay on track. You know, when we watch the markets today, Dow Jones up 350 points, it's easy to become complacent. It's easy to believe that this is going to go on forever. You know, and I know that it mathematically is already over. It cannot go on forever. And this is why you're seeing the economy on a daily basis crashing, collapsing. Why we're continuing to see businesses go out of business. Why we're seeing people now so dependent on credit cards. You're seeing people that cannot pay their debts back, can't pay their mortgages back, can't pay their college tuition back. And yet we have this addiction with debt, and people are continuing to take on more debt because they're addicted to it. They're addicted to a lifestyle, a standard of living, and they can't stop this addiction of debt. Just like the system, it is addicted to debt, just like the stock market. It is addicted to the Fed to pump in more artificial money. And ladies and gentlemen, at some point, the piper must be paid and the debts must be paid. And it's going to happen. And it's going to be probably the worst time in U.S. history because there's going to be so much pain felt. So many institutions, banks, financial institutions, households, businesses are going to be wiped out. Going to be wiped out. No, there's no ifs, ands, or buts about it. It's mathematically impossible to come back from where we're at. The damage is done. And you have to understand that. The damage is done. There's no going back. And this is why you must not be complacent. Because, look, people can tell you and anything you want to hear, and people can be out and about, and life is usual. But so many people that you think are doing well are drowning in debt, and they're on borrowed time. Borrowed time. So many of these institutions, so many of these banks, so many of these corporations, zombie companies, households are on borrowed time. So make sure you do not become a victim of this because somebody's telling you to stay positive, be optimistic, everything's going to be okay, because the people that created this mess are going to fix it for us, right? Again, if you believe that, you're drinking the Kool-Aid, you're delusional, and you're going to pay a very, very severe price for believing in that dream. It ain't going to happen. Get as self-sufficient as you can, get out of the system as much as you can, and get ready and buckle up for 2022 because it's going to be a very, very, very bumpy ride.